Hi guys, welcome back to the channel. My name is Rebecca and on this channel I go through all things accounting, finance, Excel and investment related, so if you like this kind of stuff please do consider subscribing, and otherwise let's get straight into the video. So on Friday I sent a message out on the community tab just to ask if there was any topics or subjects that anybody was finding difficult that they'd like me to create a video about. So there was one request for the high-low method. So this does come up in terms of elements of costing. So it's a method that's used to basically identify a fixed element and a variable element of a cost. So in most cases when you're looking at costing, you're going to have fixed costs and variable costs. But these costs that we're going to look at today have got semi-variable costs. So a fixed element and a variable element. So I'm going to show you how you can identify the fixed cost element and the variable cost element to then use that information to forecast what costs are going to be for a certain amount of units in future. So we've got 3 steps to have a look at. So first of all, we're going to calculate the variable cost per unit, then we're going to calculate the fixed cost per unit, and then thirdly the future costs. So if we have a look at this table here, what we want to focus on is what is in column C and not necessarily what's in column D for the moment. So if we have a look at this column C, we want the lowest cost. So we can see here that December has got the lowest cost, so we're just going to highlight that there. And in terms of the highest cost, November has got the highest cost. Okay, so what we now need to do is calculate the difference between the highest and the lowest cost and their associated units. So what we mean by that is we're going to take this £158,700 and minus the 115,200, and that will give us a difference of 43,500. And then we're going to take those units there. So we've got 15,600 and the 11,250 here. So basically all of the highest minus all of the lowest there. And that's given us the difference of the 43,500 for cost and 4,350 for the units. Now, in order to work out the variable cost, all we're going to do is take this total cost of the 43,500 and we're going to divide that by the 4,350 units, as you can see here. So that then gives us the total variable cost per unit. So that's actually £10 exactly on the dot. So next, we're going to calculate what the fixed cost per unit is. So if we have a look here, we already know that variable cost per unit is £10 per unit. So if we take any of the line items that are on the table, so we don't have to take what we've already used above, so the highest and the lowest, we can take anything on there. So if we were to take these units here, these 11,500, and we times that by the £10 per unit, we'd get £115,000. So that's our variable element. Now, if we take off the total cost of 117,700, we can see that actually the fixed cost is 2,700. So if we did this again for any of the others on the table here, so this 13,250, if we times that by 10, we get 132,500. And if we take off the total cost, so this 135,200, we again get 2,700 for fixed costs. So it really is just as simple as that. So if we then go to this third step where we need to calculate future cost, if we have a look at what we've got here, we're being told that we need to calculate the total cost for January of next year if we have expected output units of 14,000. So all we're going to do there is take 14,000 units times by 10, so that variable cost. Then we're going to add on the fixed cost, and that brings us back to 142,700. So all we need to do there is type in 142,700, put our 14,000 units in, and that is as simple as it gets. So to make sure that you understand, we're going to jump on another couple of examples very quickly. So let's move on. Okay, so the exact same type of format. So we know that we're going to have a fixed element and a variable element. So we're going to take the highest cost in this table. So we've got September is the highest cost there, and then our lowest cost is July. So if we pop over here the 63,000 and the 97,200 and then 15,700 and 10,000. So that's our cost, and that's our units. There. If we take the 97,200 minus the 63,000, that gives us 34,200. And if we do the same again for units, we've got a difference of 5,700 units. So again, really, really simple. Just take this 34,200 divided by the 5,700, and that gives us variable cost, if I can spell variable, of £6 per unit. So we know that that is £6 per unit. So if that's the case, then if we take, again, anything in this table, so if we take December here and just go, right, I've got 11,250 units, times that by 6, and then minus total cost of 7,500. So I'm only minusing just to get a variance, but you know, you can do it either way as long as you're just taking the amount of cost that you've calculated minus what they've got, or the other way around, what they've got minus the 7,500. That'll still get you back to your 3,000. So £3,000 is your fixed element, and we can check it before we go ahead and say that that's definitely the fixed cost element. So if we take, let's take this 13,250, times that by 6, and then I'm just going to take off the total cost there, then that again shows me that fixed cost is £3,000, whereas the variable cost is £6. So now we need to calculate what January is going to be. So if we're told that, say, total production units are going to be 15,900, so we need to work out the total cost. What we're going to do is we're going to put our fixed cost here, which are £3,000, and then we're just going to take 15,900 times by 6, add them together, right, so, and we get the 98,400. So make sure once you've done all of these workings that you actually complete the table, because otherwise you're not going to get your full marks here. So got 98,400 there and 15,900 units there. So let's jump on to our final example here. So as always, step 1, we're going to take the highest and lowest cost. So September here is our highest cost, and what's our lowest cost? I think it's October there. Yep. So when you're doing this as well, you could write high low next to them if you want to. So we're going to take these costs here and these units here, and we're going to get the variance between the two, just like that. So we're going to work out variable cost per unit, which is again just going to be this 63,800 divided by the 5,800, or the total cost difference divided by the total units difference. So that gives us £11 per unit. So we want to work out fixed. So step 2, fixed costs. So again, here we can take anything, any of these production units to work this out. So we're just going to take, let's take December. So 11,250 units times by 11. That gives me the variable cost. And then if I take away the total cost of 133,750, that's going to give me fixed cost of £10,000. And again, we can always check that, and I would advise that you do check it with another example. So if we take the 15,600 times by 11, that gives us variable cost, and then take off this total cost of 181,600, the difference is 10k. So £10,000 is your fixed cost. So if we're then asked again to calculate January, then we can do that really quickly. So if we're told that total output units are expected to be, let's say, 21,000, they've had a very good month, then I'm going to pop my variable cost here, fixed cost here. So £10,000 for fixed cost. And then variable is going to be 21,000 units times by 11. So my total cost for January is going to be 241,000. So let's pop that into the table. Again, make sure that you do that step. Don't miss that step out, whatever you do. And again, it's as simple as that. So I hope you found this video useful as always. If you've got a video that you want me to cover or a particular topic, for example, then just pop that in the comment section below and I can definitely take a look at that for you. But otherwise, consider subscribing as always, and I shall see you on the next video.